Hey, hi everyone. Welcome to another video. So today we're going to discuss about Elliot waves trading strategy and how it could be used in forecasting at intraday positional as well as swing trading levels, and whether it's used in hedge funds, and what is this Elliot waves history, who invented them, and how successful or is this strategy, what are the returns generated from this strategy, with some specific examples. So that is Elliott waves is a topic and trading strategy for today. So Elliott wave theory, basically it's invented by Ralph Nelson Elliott in 1938. After analyzing 75 years of stock data, he had invented this theory. What this theory says is, that markets follow fractal wave patterns. So this fractal wave pattern includes five-way impulse in the trend direction and three-way correction against it, and it incorporates Fibonacci ratios to predict wavelengths and targets. So let's see what is this five-way impulse in trend direction and three-way correction against it. So this is what it is. So wave one, wave two. So this is an impulse five waves. Okay. So wave one, beginning of a new phase, retraces to a portion of wave one, which is again Fibonacci retracement. Generally retraces based on Fibonacci ratios. Okay, and then wave 2 will move to wave 3, which is generally wave 3 is the longest and the strongest wave, and then again it will retrace to wave 4. Again, this is based on Fibonacci ratios, and then it will go to wave 5, and that's the final wave. Then what will happen is market will usually become weaker here, and then a three wave retracement will happen. So first, second, and third. So this is what you know um, Ralph Nelson Elliott has found, that after analyzing 75 years of stock data, that this pattern is repeating and happens. That impulse wave of five waves happens, and then a corrective wave of three happens against the trend. So, yeah, it incorporates Fibonacci ratios to predict wavelengths and targets. So, applications by trading horizon. So, if you want to apply this in intraday trading, we need to use 1 to 15-minute charts and identifying minor wave structures. Okay, focus on real time count validation and tight risk controls. Some traders who use this Elliott waves strategy at intraday level in 1 to 15-minute charts have reported 40 to 100% annualized return on investment with disciplined setups. Swing and positional. So trade wave two retracement bounce into wave three. So wave one is going like this, then wave two, right? So here you need to basically trade, and then you need to capture the entire wave three and exit at wave five. So that is the strategy. So if you see here for swing trading, yeah, yeah. So if you see here, so swing traders generally have to enter here and capture all this trend and may exit some portion of it here, and then again exit it here. So that's what the strategy says for swing traders. Okay, and it's widely used with Nifty and Reliance stocks, and it captures multi-wave swings. Hedge funds and institutions, some quants and CTA, commodity trade advisor shops, incorporate Elliott wave counting into auto trading models. The evidence is anecdotal. Robert Precher, an Elliott pioneer, predicted major moves like the Dow's collapse in 2002 and 3 and gold's peak in 2011. So these models can be used for prediction. Okay, so that is the beauty of these. So you can predict beforehand by using these models. There was a repeatable pattern happening, and it came out of 75 years of stock market data. And so Robert Precher and Elliott Pioneer predicted major moves like the Dow's collapse in 2002 and 3 and gold's 2011 peak. Others are, Dan Zanger correctly forecasted the Nasdaq tech crash using Elliott waves. So that's the beauty of it. You can forecast things, and there is some level of certainty to these models. Performance and evidence is Dow 2002-3 pressure has forecasted from 11K to 7K it will fall and succeeded. Gold 2011 Elliott wave models predicted a $1,900 peak accurately. Bitcoin 2017 Elliott wave analysts correctly anticipated the bubble top and crash. And Nifty and Reliance case studies, Elliott wave based entries produced profitable swing trades. And mixed institutional review, objective Elliott waves didn't outperform trend following on US stocks. Okay. So there are strengths and weaknesses to this model. Strengths are it captures market psychological levels and fractal scale usable. This is usable across time frames, and it's effective for swing trading and breakout timing. The cons and challenges of these models are it's highly subjective wave counting and it's prone to bias, lack of real-time precision on wave start and end, and requires strong discipline, risk controls, and confirmation. A practical elite wave strategy flow would be identify primary wave, which is one and two. You identify on a daily chart or a 4 hour chart. Then in wave two, you buy there near the Fibonacci retracement of 38 or 61%. You buy there and capture the entire wave three impulse, and you exit near wave five peak, or use trend indicators to confirm reversal. So for intraday, adapt the same structure on 15-minute and 5-minute charts with tighter stops based on recent waves and low size. So this is how you could practically incorporate this into your swing trading as well as into your intraday trading setup. Final wave takeaways are Elliott waves offer a structured, psychological driven way to forecast market swings. And when they are used with disciplined risk management and confirmation tools like Fibonacci retracement momentum indicators, they enable profitable trades, especially in swing and positional horizons. Yeah, however, this approach is subjective and requires experience to master. So yeah, you need to add this with some other confirmation tools like Fibonacci retracement or momentum indicators like RSI to increase the probability of this trade. But yeah, this is what Elliott wave says, and yeah, it's used for swing trading, entering at wave 2 and exiting at wave 5. And that could be used in intraday trading also, and it's used for forecasting. Some very specific examples, they were able to forecast the Dow 2023 fall, gold 2011 peak, and Bitcoin correction. Okay, so that's it for today, guys. Thanks everyone for joining the call. Have a nice day. Bye.